Good afternoon and welcome to economictimes.com's webinar on GST. From July 1, we have migrated to this new indirect tax system, but a reform as radical as this has its own set of challenges. There are bound to be certain teething issues and challenges for businesses, particularly in the initial phase. This webinar aims to touch upon some of these key issues which industry and businesses are facing and also answer some of your doubts. We have with us today Mahesh Jaising, partner with BMR Associates. Mahesh will share a short presentation, which will be followed by a question and answer session. I will request all to post your questions in the small chat box available on the screen. Mahesh, please take over.
Thank you very much. Very good afternoon to each one of you. We are 18 days into GST. I think it's obviously been an exciting bunch of 18 days. The government has been regularly monitoring the development and practical challenges at a ground level on a daily basis. We've been spending some time with the authorities and understand that a lot of the teething issues have been escalated to the highest level. And we've also seen that a lot of circulars are already being issued by the government and the tax authorities. So what I have before you is what are the key issues that one needs to look at from a business standpoint in this process of having gone live into GST and now having doing business under GST. While I'm sure you've crossed that phase of what is the rate of tax on my product, how do I disclose the tax on my invoice, those phases may be already through, but what you will have to do from there on is something that I'll be emphasizing on. I will cover a bunch of slides I have in about 20-25 minutes, and we can do a Q&A. Many thanks for some of you who have already sent us your inputs and in terms of queries. I will definitely take as many queries as I can. Before that, I think the first and foremost issue that we have is that what happens to stock in hand that one has who is actually a trader. So the fundamental change is that under the pre-GST era, you would have had an excise duty that was leviable on manufacture of goods, and then you have a VAT tax that applies on the supply chain. So while 12.5% tax would have applied on manufacture, if you are a retailer and the goods have gone through a stockist, a distributor, then a retailer and an end customer, how does the tax apply? What happens to the inbuilt tax? So many of you will be aware, but I thought I'll give in a little bit of more detail of what you exactly need to do to avail the credit. So where you have a duty claiming document which has excise charged on it, you will be entitled to claim the entire excise duty as a credit. Where you don't have the duty claiming document, but you have just the stock in hand, but obviously it's tax suffered, you can claim either 60% of the central GST or 40% of the central GST, depending on the rate of the tax of the product. So if your product is about a 5% rate or a 12% rate product, then the deemed rate of 40% applies. If the product is at the 18 or the 28%, you have a 60% rate that applies. So what you would need to do is, you would need to, as a businessman, if you have stock in hand, put together your entire list of products that you have in hand, put them into two categories: those that you may have imported directly or purchased from a manufacturer directly, and those that you have you purchased from another trader. For the first category, get the base document list together, put together your GST Tran 1, that's the document that is referred to in my slide as well, and submit that by June 30, and you'll be able to, within 90 days of June 30, by September 30, and you'll be entitled to claim the entire credit of GST. Moving on, if you do not have the other credit a credit claiming document, as and when you make the sale for the next 6 months, July, August, September, right up to December, you charge a central GST element, and correspondingly, the 40 or the 60% credit is available. So in a nutshell, I think that your first task would be have a very clear, robust closing stock record as of June 30, and also understand between stock that is purchased directly from a manufacturer or stock that's imported directly. So Now, I think the next point is that there is a fair bit of uncertainty regarding, what tax should I apply on GST right now? Should it be for stock that is lying before GST? And in that particular situation, I would like to highlight that while there would be some challenges, the golden rule for goods is a little bit more easier. If you have sold the goods on or after July 1, please apply the GST tax. If you sold the goods before, but you may be getting the money now, then that doesn't mean that it is not going to attract. It doesn't attract a GST because the sale and the taxable event took place in the pre-GST era itself. It does get a little trickier for services because the service may have been completed in the month of June, but you just deferred the billing to July. There are two views there, but it gets a little confusing. But I think if the service was performed in the service tax era, completely performed and delivered, then under GST, regardless of the billing happening after July 1, you may have to raise a service tax invoice. Because I think what the government and the transition rules are very robust and very detailed, so please look out for them. But I would certainly say that this seems to be a practical challenge as to what happens to an adjustment of price post and after. Nevertheless, I do think that you will have guidance if you're a trader from your respective brand and the key manufacturer. Please engage. Most companies are addressing these issues. It's first and foremost most important to be consistent across the industry rather than have one person taking one practice and another taking another approach. Needless to mention, the law does have transition rules, but if there is a sale and a sale return thereafter, the CST tax adjustment doesn't quite come out very clearly. And I think the other aspect that I would urge each one of you is please collect the Form Cs on transactions of sales that you have made to your buyers, or please issue the Form Cs for interstate purchases that you have made in the recent past or which are pending, because the moment you have a pending forms, it will then in some sense reduce your entitlement to transferring full credit. Now, I think I would therefore try to, in the backdrop of what I just discussed, highlight that what should you do? I think you need to categorize your closing stock into duty-paying document closing stock, other inventory closing stock. You track the 12-month inventory prior to the appointed day. Prepare for compliances around the transition credits because there will be a fair bit of documentation that needs to be submitted. I would urge that it's better even if your accountant or your auditor, is certifying some of this, because while the law does not talk about chartered accountant certification, it is important that you do indeed have as much backups to support your transition credit claim. Now, if you have a sale return, it should happen within 6 months. That's anyway the normal rule that any of us as businessmen follow, because most of the VAT laws and the CST law has a 6-month criteria, and that's something that already exists even in the transition rules. Minimize issuance of a GST credit note for pre-GST transactions, because there are transition rules, but it's a little tricky for these provisions. Assess your pending Form C, Form F, like I talked about, and ensure invoices for in-transit procurements, if you had any between June 30, the last week, and thereafter, are appropriately received and accounted for. So moving on, I'm stating some of this, which I'm sure you're already underway, which is that you need registration for each and every state that you have business activity in. So please understand that even where you have a business activity in multiple states as a service provider, in the past you could avail one credit service tax return and therefore raise invoices from that one service tax registration for your customers across the country. You wouldn't really need to track which state is your customer. All that you would need to know, if the customer is within India, it's a domestic service. If the customer is outside India, it would have been an export service subject to some exceptions. But going forward, you will need to take a state-wise registration, very importantly, to be able to avail local credits. So let's say I'm running a consultancy business and I have 4 offices. It's better, not better, the law requires me to take registrations in the 4 states. My landlord charges me rent with the CGST and SGST. I will avail the credit in the respective four states, and I will then take that forward from there. Because if I do not claim the state-wise registration and take a return, then it's likely that my credit itself will be lost out. We do understand that there are practical challenges because there's a long pendency in issuance of the provisional ID. There's a fair bit of traffic, and I know that it was shut down from 15th to 25th. But be that as it may, I think as things stand, assess your business requirements. Go and get the registration as soon as you can for every state that you have operations. What are the additional documentation and reporting requirements? I think clearly, you need to be mindful of what sort of documents you need to be creating in other than just the plain vanilla invoices, because the concept of self-supply exists. You will have to have intra-entity supply invoices, payment vouchers, and some other vouchers and stuff like that. So it does become important to map and monitor what is your basic process today, right from buying goods to selling goods. All of us have purchase orders and then sale invoices. What else do we need to have? It's important to assess and start getting that sooner than later, because while the government will be quite lenient in the first few months for some procedural lapses, I think it's important to fix some of these and get them in place sooner than later. I wanted to highlight, and I'll just take you to an annexure here, that under the GST law, I think the Revenue Secretary has time and again said it is not 3 returns every month. It is just 1 return where you put in your output details in GSTR1. The GSTR2 is nothing but your input return or your input credit return, which gets auto-populated based on your output return. And then GSTR3, so the date timeline is by the month of 10th, the 10th of the following month, you need to populate GSTR1, by 15th is GSTR2, and GSTR3 by 20th. So I agree that it is not really 3 full-blown returns, but there is a 3-pronged exercise that you will need to undertake to be able to meet with your compliances under GST. What are the returns again? GSTR1, 2, 3, an ISD return if you do have a pan-India operation and a centralized procurement of service. Please note the dates on the right side of the slide, and I think that's going to be important for you to follow as well. The next point is, on the checkpost, I would say it's quite commendable that 22 states have dismantled their checkposts on the last count. I do think that that's something that is only going to improve. We do have a little bit of a stopgap arrangement right now for e-way bills, because the government has not yet come out with the formal new e-way bills, and in some sense they have re-notified the earlier state way bills, and that's something that you will need to be following and keeping in place. So I think with the checkpost moving away, I'm not saying that your compliance completely comes down. There will need to be a fair bit of emphasis that you need to do, that your documents in the form of the invoice have as much details as is required, so that you do not have any problems for movement of the goods. The next point that I thought useful to highlight is that the government has indeed relaxed the return filing for the first 2 months. So what you saw was a GSTR 1, 2, 3 to be filed by 10th, 15th, and 20th. That is not something that will be required for the month of July and August immediately. It will have to happen a little later. There is a bit of relaxation that I've outlined in my slide. The government has allowed the former detailed GSTR 1 to be filed by September 5th and September 10th and 15th respectively for the month of July, for the month of August by 20th, 25th, and 30th, and September will have to be filed by October 10th, October 15th, and 20th. So from October 5th to 20th, I'm sure all of us will be quite busy dealing with these returns. Right now, we have a bit of a breather to be able to get GST ready and more ready. Wanted to highlight that the due date is actually 20th of the next month, there's a simple return for the month of July and August 2017, where you would need to just report on a consolidated basis your interstate sales and your local sales, and correspondingly on the purchase side as well. Please also note your earlier service tax return due date is now August 15th for the 3-month period, and therefore it's important that by that date you need to finalize your your service tax credit closing for sure, because that is what is critical for you to transfer into the GST law. So while the GST law allows you time till 90 days, as you may recall the Tran 1 document, I think your focus right now is to see what is the exact closing balance so that you'll be able to report it in your service tax return as well. Pricing, I think it's an important one. Before we get into how the law is looking, what are the words, and it's important to understand the concept. The government, with the very positive intention to protect pricing for the common man and to ensure that it's not that companies are enriching itself out of input credits and and change in rate of tax. They brought out a provision that says that no company or no supplier shall, in a way, the supplier shall be required to pass on the benefit of a decrease in the rate of tax or an increase in the credit pool. Now, the question that comes up is that what is the mechanism if, where do I have to compute and see my pricing at a SKU level, at a product level, or at a overall entity level? What is the net effect of credits? Is it direct credits or even indirect credits that need to be passed on? This is something that you would need to assess and evaluate. Whether the credit applies on my transition stock, because the rule says transition stock credit shall be transferred subject to the benefit being transferred to the customer. But if I allow that benefit to be transferred, and if the rate of tax of my product was earlier at the 14% VAT and it's gone up to 28, even if I get some deemed credit, how can I pass that on? Because on a net basis, I'm still not on a profit making at all. So I think some of these things, the anti-profiteering section is very short. The intention is very clear. There's no doubt that the government wants to ensure that companies do not enrich themselves out of a rate change. So today, if the effective rate on your product is say 24%, let's say you're manufacturing a pressure cooker and you're charging 24% as the excise plus the VAT tax, and tomorrow if the rate is 18, tomorrow as in under the GST era, shouldn't you be reducing the price by 6 percentile points? That is really the intention of the government, and that's what they have been wanting to achieve. And if you take a step back, that you have really heard of the significant prices going up, because one breath as businessmen we may have a challenge that we have a 0% rate, a 5% rate, 12, 18, 28, and then a 28 plus cess. So keeping the 28 plus cess, which is mostly for the motor cars and aerated beverages, we effectively have 5 rates. I do think that the 5 rate structure is the one that actually enabled the government to be able to, command the position that we are in, that actually there's not been a significant increase in the net taxes, for many products. Broadly, most have been the same. Some have in fact come down. And yes, I'm not denying that some may have gone up a bit, whether it is some pharma products other than the life-saving drugs earlier had about 10 to 10.5% effective cost. That has gone up to effectively 12%. Computers, laptops have gone up from the 15 to 15.5% to about 18%. I think all of these aspects need to be noted. It's not that there has been no increase. The anti-profiteering law is in some sense dealing more that where the rate is reduced, maybe the product was under the 24% rate effectively today, that coming down to 18. Those are things that are what this anti-profiteering is intended to be. Issues with respect to post-sale adjustment, is it the nature of a discount? Is it a sale promotion? I think it's important that GST is a new law, but we shouldn't treat this new law to be something that is which we don't need to rely on earlier case laws under the sales tax law. If something was a discount, it's a discount under GST. if a particular activity under the pre-GST regime qualified to be a service, it is a service even after GST. So I do think that it's important to keep going back to earlier principles in taking final GST positions as well. I think one of the points that raised a bit of concern for many of us was on the MRP pricing. What happens to Legal Metrology Act for goods lying in stock as of July 1? I think the government clearly came out that you need to revise the MRP, and most companies anyway wanted to where it was going up, but even in cases that it goes down, in some sense, the spirit of the MRP and the Legal Metrology Act circular says revisit your price fixation. So independent of what the MRP stickering per se says, because of the anti-profiting, it's paramount that you look at whether you need to reduce your prices. If you are supplying goods as a manufacturer and you have a distributor and retailer, you will say, why should I leave you with the same margin? And because yesterday you were paying a service tax on your rentals or on the freight charges, and that service tax was not available as a credit to you. So under GST, the taxes that are there on such expenses is fully available for credit. So why shouldn't the margins come down? I'm not saying it's a right or wrong answer. Either whether you're wearing a hat of a reseller, please be ready for some of these discussions. I think it's also important to understand how to market and sell goods along with free goods, because it's important that your marketing and promotional document reflects the substance quite clearly. Otherwise, you could have a debate on how is the free gift to be taxed, because if it just says, pay me 1,000 rupees, you get a shirt and a trouser together, it's fairly different from saying, pay me 1,000 rupees, you get a trouser for it, and hey, you get a shirt with that free. So I just think that it's important to revisit the marketing strategies in that case. I just wanted to move on, and cognizant of time, and I'll cover in the next 5 minutes, that the government has come out with what seems to be a little unpopular in terms of a process that for exporters of goods as well as services and supplies to an SEZ, you will need to be filing a bond or a letter of undertaking to be able to claim export status. The first thing comes to mind, particularly for those of you in the services business, would say, hey, I never had to go and file any bond or any letter of undertaking. It's fairly unusual for me to do that. Yes, that may be, but it is clarified that it will apply to you. They have given some relaxations in terms of the process, but give and take, I think the larger issue is that you should be entitled to claiming benefits with respect to exports as well as the supplies to SEZs. But I do urge you get this documentation in place, because the last thing you want is, say, 2 years later, when your time of assessment, somebody says, hey, you did not submit this document, pay the entire 18 on the billing. That would mean quite a bit. So anyway, so that is that in terms of the export procedure for SEZ and normal exports. If you look at, the government has anyway clarified and given reference to certain bonds and legal and letter of undertaking in terms of how they need to look like. This is, as I've called it, from GST RFD 11 and RFD 01. So, I do think that the government has anyway said to July 31, there'll be a specific relaxation. And I think this is an area that each one of you, if you have any export, will need to examine and move forward. Moving on, I think from an IT system perspective, please understand the invoice that you raised today is, yes, indeed a bearer check for a buyer in the same state. But where the buyer is in another state, it's natural that you would have charged the other tax on that, and then you will need to make the appropriate adjustment. So, I do think that if it is another state, you need to write IGST state A, IGST state B, IGST state C, because if you don't mention the correct state reference, you're effectively moving taxes from one state to another. And hence, I do urge that please place a lot of emphasis in getting your invoicing correct, because if there is any error, that could lead to incorrect taxes being paid onto an account of incorrect states. There is a requirement for separate series of documents. My slide does give that It's important to appreciate that the government has a Twitter handle where there are a lot of queries being answered. Also, the government has launched an app that is available on all Android phones, and it's also available on their website, which gives you a GST rate finder where you need to put in your HSN and you will be able to look at the rate that's applicable to your product. Uncertainty regarding certain legal aspects is something that does worry some companies, that when I'm determining where does my service need to be located, is it a local service, is it an interstate service, that is something that is worrying companies. That if I'm a consultancy company or an advertising company, I have a customer in Bombay, but my activity is done for the benefit, his head office is in Bombay, but it's done for the benefit of his Delhi office. Should I charge tax account Delhi? Should I charge tax account Mumbai? What happens to input service distribution? What happens to self-supply? These are legal concepts, which I think even if my next webinar, whenever it happens, and when we connect, and if you just take stock 1 year later, mark my words that service sector issues, intra-entity supplies, input service distribution are the ones that are slightly more complex than the others, and therefore I would urge each one of you to spend a little bit more time than not on that front. Now, I do think that it's important to quickly cover the e-commerce sector because many of you may be selling on the platform. I think as far as an e-commerce operator is concerned, the government has prescribed a TCS at 1%, but that has got deferred. Hence, we are waiting for the new TCS requirements or other requirements, but they've deferred it till September. And therefore, right now, as things stand, when you make a sale on an e-commerce operator platform, you will charge appropriate GST, and that's it, nothing further, and you don't need to worry about a TCS. But from September, the e-commerce operator may be required or will be required to be reducing, say, 1% tax and paying you 99. So I do think that it's important that the slide is actually probably the most loaded slide in terms of the impact that none of us as prudential businessmen would like any taxes paid as on the input side to be expensed off. We would like it to be, in some sense, created as an asset. And therefore, I would say that after you figured out and got the dust settled around issues relating to invoicing, rate of tax, and others, please focus on managing your credits on a pan-India basis. Because if that's a credit legitimately due to you, you would not like a single rupee of a legal credit due to you not being available. So I'm going to pause here and transfer this back to Pran, and then we will probably take into some of the questions that you all have raised. Pran, over to you.
Great. Thanks, Mahesh. And we have a lot of questions. So the first one that I have with me, you briefly touched on that, but Pranav Jain sends a question saying that can we issue credit notes for annual and quarterly discounts without levying GST?
Yes,
What
I've got
about
that. I've got that one. Yeah, I actually have the. So maybe I could read them out. So I think credit notes can be issued for annual and quarterly discounts. There is a very, and for you to be able to do that, you will have to refer back to your original invoice and pass a credit note for each corresponding invoice, because you need to have that reflected in your GST returns, one. Two, if you don't intend to pass on the GST amount, so let's say I sold a product at 1,000 rupees to a distributor, then he sells it at 1,100, and based on his performance and target, he is entitled to a 3% discount. I would say, hey, for 30 rupees, here is your credit note. And I would probably say, why do you really need to adjust the GST? Because I'm not reversing it and reversing it back to the government. The same way I would expect even you, if you're able to, otherwise avail the credit, keep the credit aside and then have a financial credit note. I think that is very doable and possible. So the next question I have is, are there exemptions for SEZ? How will a transaction with the SEZ regime be undertaken? I do want to highlight your kind attention to the slide that I had explained earlier, with respect to SEZ and exports. So supply to an SEZ is indeed zero rated, but in the sense of how will that zero rated apply? Will I have to issue a form A1 or A2? I think different states are providing for different requirements. I do think that that's something that you will need to look out for, because I strongly believe that the zero rated exemption for SEZs should truly be imported or applied in its true spirit. Pran, you would like to go ahead, please? The next slide.
Yes. So the next question that we have live is from Hitesh Jain. He says, how will builder go on with anti-profiting provision? How to pass benefit to new buyers of flats post GST as well as old buyers pre GST?
So thank you, Hitesh, but this is indeed an interesting question. I think the construction industry and real estate has been a victim of multiple taxes, because right from when a bag of cement is manufactured to the steel to the the flooring, the pipes, and all not whatnot, plastic, excise duty is paid. Then it goes to a developer or a contractor. The contractor then builds. The Supreme Court held that any new apartment construction is a works contract, so that principle remains. I think it's like this. We all know the rates of tax, that it's 18% for when there's a construction agreement, and about 12% if it includes the land. There's a check and balance of 1/3 towards land. I won't go into that. But uh, on a first brush, you may say 18 seems a lot of money, but I can only tell you that if it's for a new project, you will no longer have to cost your bag of cement or your, let's say, steel. You bought, steel for 1 lakh rupees. You paid excise of 12.5%. Today, your cost is 1,12,000 rupees. But under GST, your cost is only 1 lakh, because the 12,500 is fully available as a credit, and it goes to the asset books of your accounts. Now, in that sense, by the sheer logic of it, there's a 12.5% bit of saving. There used to be a VAT tax. Some states had a 1% tax. Some states had a, no 4% or 5% composition. And some of the composition conditions were so weak or so high that to meet that, companies would go with the full tax. So some companies would charge 10% effective VAT and the service tax of 6. So net, I do think that this is a sector that I would give it a thumbs up, because the effective tax is probably just the same, and in many cases quite lower as well. So how will the builder go about the anti-profiting provision? The way I look at it is that if a project is already completed, there's no question of the builder being really anti-profiting, even if he has unsold inventory, for a simple reason that he's incurred all taxes which he could not have claimed credit of. And anti-profiting only applies where you can claim a credit and where you're better off. So if it is a new apartment, I would think that the baseline price, say I'd agreed 8,000 rupees a square feet, I would reduce that to 8,500, depending, or whatever may be the number, depending on the credit that I'm able to avail. Now, we do wish the government had come out with a little bit more clearer guidance. I did talk on my earlier slide deck that, what happens to transition credit and assets. But all that I can say is that this is a teething issue. Anti-profiting does worry large corporate houses, but I do think one needs to look at it in perspective and only then take a call whether you need to assume the anti-profiting applies or not. Yes, Pran, you'd like to move to the next?
Yeah, the next question is from Kunal Nahar. I think we've had these questions across our GST Simplified sessions that we did across the 3 cities as well. But Mr. Kunal writes, I would like you to clarify on issues of goods given as free offer in the tax invoices. Is the free item component also taxable under GST? For example, if my customer buys 100 units of one product, I give him 10 units free. And I think in our events also we had issues where people were asking, when we give out samples, does GST apply for those samples as well? So what is the tax implication on this?
So let me start off with the base principle. Every supply is taxable if you are receiving money. If you are giving something free to somebody, it's not taxable because there's no consideration and if the party is unrelated. So let me for a moment say that I'm giving a free service. I'm doing a training for 5 clients. 4 clients I charge a particular fee. The fifth client says, you know what, don't charge me a fee this time. Does that make it an exempt service? Is it a free service? I don't think so because free needs to be looked at in the concept, in the context of the industry that you're in. As far as goods are concerned, again, the same principle applies. However, where the government has prescribed specific rules for issuance of a sample, they've not talked about the free part per se. I do think it's prudential. It's like this, the optics can be very different if you say I'm buying 10 and one is free, or I'm buying 11 at the price of 10. In the latter situation, I wouldn't be worried at all. But in the former situation, trust me, I would be a little worried because there can be differing views on that one. Net net, I do think in this example given by Kunal, it's important to understand that how is this 101 contract, 100 plus 1, how is it documented? Is it just going in as a free item? That's something that I need to look at or suggest that it's looked at holistically and drafted appropriately well, because that will give you the ability to take a no tax position as well as avail full credit of the input side.
Great. Wait, the next question which is coming is, being a bill consolidation provider across all the states in India, do I need to take registration in every state or not? This is by Ashish Batra.
Thank you for the question, Ashish. I'm not sure from your mail whether you're looking at whether your business requires you to have offices in each state or whether you have customers in each state. The first and foremost principle about a registration in every state or not depends on whether you have a fixed establishment in that state or not. The moment you don't have a fixed establishment in that state, then it does mean that your customers are located across the country, but you are located in one place. So, I mean, a classic example would be a consultant like myself. I'm giving a tax advice to, say, one of you based in Jamshedpur, and then I charge for that. I will then say that that is actually it doesn't require me to charge GST in 25 states where I supply. If I'm only supplying from one state, I can still take only the single registration. So I do think that the answer of the registration is more dependent on how many offices you have. So when you have a bill consolidation provider, are you doing this out of one office or different offices? And those questions need some answers to before we go into anything definitive.
Great. The next question that we have is from Chaitanya Vaidya. Right in, I have 2 business units registered under the same PAN, a restaurant and a retail shop. If I want to opt for the composition scheme, can I do it or not? What rate will be applicable to me, 5 or 1%?
Okay, so the point here is that since you're within the 75 lakh threshold, yes, you can opt for the composition scheme as long as you don't have any services, because if you do have services, then it gets taxed from every single rupee after the 20 lakh rupees. So here, all that I would say is that yes, it will be a slightly disconnect in terms of the rate of tax for composition for a restaurant and retail, but be that as it may, if on a cumulative basis you're still within the threshold of 75 lakhs, I don't see a problem for you to continue under the composition scheme.
Right. The next question is from Viswati, and he writes in, is it permissible to raise one single monthly consolidated invoice under RCM against all purchases from unregistered suppliers, irrespective of number of suppliers? Also, is it mandatory to mention GST rate and GST amount in payment vouchers?
The answer to the question is that you will have to issue a single invoice for supplies at least from each unregistered person. So if there are 25 unregistered persons, you would need to raise at least 25 monthly invoices. You can't just raise one. In fact, the debate which we had was that do I have to go to the each and every sort of a situation of every invoice pay the reverse charge. I think the monthly one is a fair approach, and that should be fine. Is it mandatory to mention the GST rate and payment voucher? I would think that's a prudential thing for you to do so, just from a consistency perspective.
Great. So moving on, Siddharth Doshi writes in saying, where services were rendered, an invoice was also raised before June 30th, 2017, but invoice copy were received and booked by the company after 30th June, as books for June 2017 were closed. Can we take credit under service tax law and subsequently carry forward under GST law?
So, if you receive the invoice, services rendered, invoices raised before June 30, I think just because it's physically received after June 30, it doesn't matter, because I would urge that you avail the credit as of June 30, disclose it in your half-yearly return due on August 15th. Also, please file the trans one. I think that should be good enough and fine to you.
Great. The next question is from Parimal Shah. He says, in case of office rent, the monthly rent is rupees 40,000, but total income of the person is below 20 lakh. Will the owner issue rent invoice with GST?
So the fact is that he's into service business. The threshold that we need to look at is the turnover on a cumulative basis less than 20 lakhs? The answer is yes. And therefore, I would say that he does not have to actually issue a invoice and charge GST because he's within the 20 lakh threshold. Now, if he has multiple properties under him as a proprietor, then that may be a difficult, or will be very difficult, because they do say that this for 20 lakhs scheme applies only to specified, transactions and specified set of service providers. Also, office rent is a local service, because one of the disentitlements under the credit is that if you have interstate service, you cannot issue the rental, you can't claim the benefit of 20 lakhs. Now, in this case, I think the answer is clear that there should be no GST on the rental invoice. The next point really is that if the rental invoice is 40 for a residential apartment, there's anyway no GST. I just wanted to highlight that since we are at this topic. Please go ahead.
Great. Great. The next question is from Ankur Garg. He says, we sell shoes through an online website after getting the job work done by small craftsmen. Her business turnover has been below 20 lakhs. However, the website insists she take on a GST number. How would the transaction GST reporting work in this case for her? Also, now that we are on this question, I think across our events also, Mahesh, you would recollect getting questions on job work. So if you can touch on that a little bit as well.
Sure, I'll do that, Pran. I think here the crux of the question is likely on the fact that this particular entrepreneur is selling less than 20 lakh rupees, doesn't have to take a GST number, but there is a deeming fiction under section 24 that says that if you make a sale on a GST network, you will have to take a registration. And there was a lot of advocacy on this from a lot of the IT companies, which the government say we hear you, but we don't know how to help you. And effectively, where we said that how can you bring in, if somebody is just doing 50,000 on an online platform, he's stuck with a GST number, and he's also stuck to charge the full GST because the composition scheme is also not available here. And therefore, I think in this case, the entrepreneur, she needs to be aware that she will have to report all these B2C transactions on a state-by-state level and actually claim this GST number. Many of the sellers are with a couple of the large e-commerce companies that give fulfillment centers, and therefore you can take a place of business registration. But that's digressing a little bit. But net, I do think that this is the problem. The government has delayed GST TCS by 2 months. Also, they have delayed for now the mandatory requirement of registration of any seller on the platform. The interviews suggest that this will only be valid till about August 31. But as far as Ankur is concerned, the question is answered in a manner that for now, let your client or let this friend of yours actually, and your own businesses actually not worry about a GST number at least till August 30. I do understand the companies are insisting for the number from overall good governance, but my technical answer is what I just covered.
Great. Moving on to the next question, Abhishek Kumar writes in saying that, okay, why is GST not applicable on petrol or diesel? And why are we still paying VAT on liquor and all such products?
So, petrol and diesel has always been a matter of big controversy under GST because the central government and the state governments make at least 50% of their revenues from petrol or diesel. And that being the case, that the government will prefer that when they're selling, I mean, they had preferred and agreed that let's not bring fuel and oil and gas into the net of GST because that means we're putting everything of 100% of ours onto the table. And therefore, they kept this big revenue spinner close to the chest and they've always maintained it to be separate. And I would therefore say that, you know, why are we paying VAT and on liquor, for example, even on the petrol, you're actually paying sales tax. It's just that you don't know back end what is going on, but you are actually paying sales tax on sale of petrol and diesel respectively, and therefore it continues to be outside the net of GST. I would like to highlight this will be outside GST for the next 3 to 5 years at least.
Great. Thank you. Next question comes in from Priyank Sharma. He writes saying that whether a separate GSTIN would be allotted to a registered person for deducting TDS. He has PAN and TAN as well.
No, I think, see, PAN and TAN has nothing to do with the GST TDS. GST TDS applies to select cases. Once you've got your GSTIN number, that should be good enough.
Great. So I'll continue. The next question that we have is from Som Sachdev. He says, have area-based exemptions been continued under GST regime?
The answer is yes or no. I think the excise exemption, the Revenue Secretary has said that all be protected because there are exemptions that are yet to lapse in excise-free zones like Himachal and Baddi and others, and therefore they are saying that they will give a net amount 58% of the central GST as a refund back, so that the benefit of setting up there continues. This was even said by the Revenue Secretary as recent as 3 days before the go-live date, saying, we will go ahead and give you all the benefit, but the final notifications are yet to come out. I would think if they come out with the 58%, they're not disheartening anybody else, because I just think that we will wait for the detail, and the 58% on a gross basis is not a bad amount, is the reaction I have from my clients. But the straight answer and in summary is excise-based exemptions will continue, but continue as a refund under GST.
Right. So the next question is very specific. It says, what is the GST rate applicable for gas mantle used for kerosene pressure lanterns?
It's 5%.
So I think the 5% rate should apply on this kerosene pressure lanterns. I'm just trying to pull out of my memory and just thinking. So I just have my book in front of me that in Schedule 1, there is parts of kerosene pressure lanterns and kerosene pressure lantern under entry 258 and 259 respectively, where the rate of tax is 5%. So please look at entry number 258 and 259 of Schedule 1 and just reconfirm whether your product is there, both descriptively as well as the HSN. That will be important for for you to take the final position on this.
Great. Thanks. The next question is from Abhishek Kumar. He says, for exporters, what is an approximate additional working capital requirement due to refund mechanism? What is the timeline for getting refunds? I think this takes into account the entire bond and stuff like that.
So, I think there are two parts. If he's a service exporter, if Abhishek is exporting services, he has an input credit pool where he pays service tax of 15%. The 15% rate goes up to 18. One. Two, the government has said that 90% of your refund claim will be granted to you in 7 days. Will that practically happen? I'm not sure. I do hope it does. If it does, that breaks all records of the past where claims would take years to be able to process. Here is a case where the claim would be immediately processed, automatically, and 90% will be received by us. But the past track record brings me a bit of apprehension whether this will work out the way it is planned. I do hope it does. And therefore, I would like to leave your thought in terms of the time frame on that it should be, much faster than before. Having said that, what is this time frame for getting the refund? I did talk about the 2-3 month time frame. What is the working capital requirement? I do think it's a function of how this refund mechanism actually works. The proof in the pudding is in the eating. So let's wait and watch. But the government's intent is very clear and very positive that they would like to give these refunds soon. I would like to add one point before we go into any other question, that if you have operations or service operations in more than one state, you will have to have credit pools in more than one state. And therefore, for each state, you can claim the credit and you will have to file the refund claim. So that's a big shift from how you're currently claiming. If you're a service exporter having, say, 5 offices, you just file one credit claim per quarter for full India and move on. Tomorrow you'll have to file a monthly claim for each state. So just be ready in terms of what not only your working capital requirement, but also what this really means from an overall compliance standpoint.
Great. Thanks, Mahesh. The next question is it compulsory to add HSN code on invoice? If yes, what are the conditions? Do we need a certain amount of turnover? This is from Aman Gilani.
Our answer is quite simple. Up to 1.5 crore turnover, no HSN. 1.5 to 5 crores, 2-digit HSN, and 5 crore above, you need a 4-digit HSN.
Great. The next question is from Ashia. She writes in saying, what duties will be levied on import of goods?
Thanks, Ashia, for bringing this up. I think that we are always used to there being a basic customs duty, countervailing, SAD, multiple duties. All that you have going forward is there is a basic customs duty, say it's 10% or 5, or say like IT products, mobile phones, etc. Not mobile phone, but mobile phone just changed, but printers, some printers are at 0% rate. Then you pay the basic duty and you pay the import IGST. That is fully offsettable against your output taxes if you're running a business as a trader or a service provider or a manufacturer. So therefore, what levies will apply? 2 levies will apply. Basic customs duty continues as is where is, as well as the import IGST applies.
Great. I think this would be probably one of the last questions. Karthik Subramaniam writes in saying that for a consultancy service provider, what is the threshold annual revenue limit beyond which one must register for GST? If my earnings are through export of services, do I still need to pay GST?
So Karthik, your question is clear. I think that for domestic service providers, the registration requirement is up to 20 lakh rupees. Nothing stops you if you're less than 20 lakhs to go take a registration because your customer may want to claim the credit. One. And 20 lakh is a total turnover and not a taxable turnover. So even if you have export more than 20 lakh, while you don't need to pay tax on export subject to the LUT condition that I talked about earlier, you will certainly need a registration. And therefore, my straight answer is that if you're a service exporter, please take the registration. Please go and file all of the documents that we talked about a little earlier this evening.
Great. I think we have a lot of other questions which have come in, but we've completely run out of time. So
yes, we have.
I would request everyone to go to our Ask the Experts section. Mahesh is one of our panel members there. It's Economic Times/GST, and continue engaging with us. We will certainly have all the questions answered which we have not been able to do today. And Mahesh, thank you for joining us today and taking all the questions. And we hope to see you soon again.